Hello, listeners. Welcome to this episode of Cryptonomics. Before we jump into today's discussion, please keep in mind this recording is for general education and is not intended to constitute investment advice. Any opinions expressed are those of the participants and do not necessarily represent those of Witham. Hey, folks. Welcome back to another episode of Cryptonomics brought to you by Witham. As always, I'm your host, Mark Eckerly, and today I welcome to the show Seth Priebatsch, president at Groma. Welcome to the show today, Seth.
Great to be here. Thanks for having me, Mark.
Awesome. So what I like to start with all of our guests is basically your crypto journey, right? Your rabbit hole experience. Everyone's got one. They're all unique and different, and they all have a different journey as to how we all ended up here in this space. So I always like to get a sense of, tell us how you ended up in crypto in the first place.
Absolutely. Great question. My crypto story, at least the beginning of it, probably is one of lessons learned, and missed opportunities potentially. Though I'm hopefully getting into the right place eventually. I have been doing the entrepreneur thing for well over a decade now. I got my start back at Princeton. Was doing math and computer science there. Won the business plan competition freshman year and went into more traditional technology, a restaurant technology play called Level Up, where we helped restaurants digitize, and eventually had a great exit. Sold that business for just around $400 million to Grubhub, and then brought the team over to Grubhub, and we eventually sold that business for just north of $7 billion in kind of late 2020, early 2021. All of which has nothing to do with crypto. But while I was doing that, many of my really smart teammates, back in like 09, 10, 11, brought this thing Bitcoin to my attention and said, "Hey, we're doing payment processing for restaurants. We should probably add a cryptocurrency," which we did not end up doing. And I took a deep dive into the Bitcoin white paper and, being completely honest, decided it was not for me. I was not sold. I was like, this is clever, and I really appreciate the technology behind it, but I had not done my full deep dive into what makes a good currency, a bad currency, a good financial system, a bad financial system, and I sort of opted out, and many of my colleagues opted in, and they have done very well, and we're smarter than me, and every once in a while remind me of that, over a get together. Then post the Grubhub sale we ended up selling to a European firm, Just Eat Takeaway. Some friends and I, colleagues, got back together, and we started digging deeper into what we were going to do next, and many of us got fascinated by the evolution that blockchain had taken, the things that Ethereum was doing, some of the other L1s, and we got sort of reignited. And 2022, not that long ago, I dove back in head first, and I'm only a few years full time in the crypto space, but doing my best to build interesting things in the broader blockchain ecosystem.
Yeah, a few years in crypto is 10 to 15 years in many other industries. So
Yes,
you're definitely not late to the game. I mean, we're all still early, right? Bitcoin's only been around for 15 years, so it's still
right.
very new and a nascent asset. But no, it's exciting. So tell us a little bit about what you're working on, what products in the crypto space the last 2 years, and kind of break down what ultimately is Groma at its heart and soul.
Yeah, so the long-term vision for Groma, and I'll start with the long-term vision and then pull back to how we're going to try and make that happen more pragmatically. But our long-term vision is we are building a real estate-backed cryptocurrency. We spent a lot of time, and when I say we, my co-founders and myself, spent a lot of time thinking about what would be the ideal currency if you were going to start from the ground up. And we looked all the way back in ancient history, like literally back to ancient Sumeria, where they had the shekel, the Sumerian shekel, and that was a metal coin, sure, but was actually a grain-based currency. You could bring your metal coins to the king's granary and trade them in for wheat, which was critical at that time in agrarian economy, all the way to modern monetary theory, fiat currency, bimetallism, everything else. And we got fascinated by both ends of the spectrum. We love the digital, permissionless, interoperable, composable nature of blockchain assets, Bitcoin specifically, but also Ethereum and a number of others. But we also really loved this idea and felt very drawn to this idea of an asset-backed currency, of a tangible asset-backed currency. In this case, we evaluated everything from gold to oil to grain as well, food, other commodities, and settled on, in some ways, this kind of elegant idea that because land is functionally the layer one of the economy, every economic activity takes place both metaphorically and literally on land, that it is a core input to every bit of economic activity. And if you could imbue land, real estate really, with the digital and composable nature of a blockchain, then you might have something that would have all the facets of a great currency: inherently limited in supply, inherently valuable, as in worth something and capable of being valued, composable in the way that blockchain assets are, anti-inflationary, and could, of course, be rules-driven. And so we set down this path of building a real estate-backed cryptocurrency, which doesn't start with the end goal, starts with building a platform to acquire and run well a lot of real estate, putting that real estate on chain, what's now referred to as sort of RWA, real world assets on chain, and maybe over the next 5 or 10 years, having enough people own that there is useful interoperability within the network, and it can transition bit by bit from being an asset worth holding, real estate on chain, to also being a currency-like object worth using.
I think that idea, right, that this is really starting to come fruition in other mainstream adoptions for digital assets, right? I think the idea of tokenization is an easier idea to comprehend for the mainstream user when it comes to digital assets, right? And understanding, why do I need a digital dollar or some new asset like a Bitcoin? And it's the idea of the underlying technology with blockchain technology and tokenizing real world assets. I think that's what helps paint the picture to bring it full circle to the everyday person that doesn't understand some of the nuances of digital assets and blockchain technology. I think that helps paint the picture to them of like, hey, here's what this technology can ultimately do. You're hitting the nail on the head on a key problem that I think blockchain technology and real world assets can solve.
Absolutely. I mean, I think back to sort of my own intro story on how I got connected with crypto, and the thing that dissuaded me, back in 2010, 2011. And again, I'll fully admit I was wrong to be dissuaded, but the emotional thing that dissuaded me was that it wasn't quote unquote real, right? Like, my concern about fiat currencies is they're not quote unquote real. And now, of course, they are real. They're backed by tax revenue and land and military might and all sorts of other things. And Bitcoin, of course, is real, right? It is backed by the network, and the network gives it strength and security. And that is a very real thing. But it is also somewhat ethereal, right? You have to really think hard about why that network effect creates value. And we all know network effects create value, but they are hard for our primitive human brains to think through. Whereas something like real estate, I think this is also why gold has such enduring value. Something like gold, the tangibility of it works well for how we view the world. And so, from a Groma perspective, what gets us so excited and why we've been able to scale this business from, we're not a big scale business yet, but from $0 in assets when we founded it to now just north of $200 million of real estate assets in the Groma ecosystem, owned and managed by Groma and owned on behalf of our holders, is because there is something naturally compelling to, yes, I want it to be digital and I want it to be permissionless, that we're not fully permissionless, and I want it to be portable. But I also want to know that at the end of the day, if I punch through to what the actual underlying value is, I can point to something as simple to understand as a building that earns rent and generates income and appreciates or maybe depreciates in value. And that's sort of the core union of Groma, the physicality of real estate and the digital nature of the blockchain.
And that's been the ongoing debate for many TradeFi people, is like gold versus Bitcoin, right? Where's the underlying value? One is invisible and intangible. The other is physically in my hand. So I know there's certain value to that and that people will pay that. But you're bringing both worlds together, which is great. That's what I wanted to dive into. So let's start with the real estate side of things. Where is Groma's sweet spot when it comes to real estate? So you said you have $200 million in real world assets of real estate. What makes up that real estate? Is it commercial? Is it retail?
Great question. So here is where we and again the founding team benefits a lot from our experience at Level Up and Grubhub and existing in this world of real world delivery logistics, working with physical, small, often restaurants, and bringing efficiency to them by grouping them together at scale to provide valuable services, delivery, loyalty, whatever it happened to be, digital ordering. When we were looking at a real estate asset class to back the Groma ecosystem, conceptually, it could have been anything, right? It could have been lab space or timberland or office space. I'm glad we didn't pick office space, but could have theoretically been anything. We picked this very narrow asset class that we call MURs, modern urban rentals, basically small cap multifamily assets from 2 to 20 units. We picked that because it mirrored in many ways the fragmented ecosystem that Grubhub stepped into. There were 300,000 small restaurants all doing delivery slowly, inefficiently, and expensively. And by grouping them together, we could build a very efficient logistics harness and provide better delivery, better returns, better margins to everybody. In the 2 to 20 unit multifamily space, there are about 2 million of these buildings in the US. They're grouped highly concentrated in about 40 cities, and they are highly fragmented and highly inefficient. And we thought, hey, that is a thing that we know how to do. And so we built the Groma platform to efficiently auto model and acquire, upgrade to the same standard, the Groma grade standard. So all of our buildings on the inside and sometimes on the outside end up looking the same, and operate them very efficiently on our platform. Our most average building, so there's $200 million worth of assets. It's about 50 buildings. The most average one, you can see them all on our website and on chain on the Ethereum testnet. It looks like a triple decker. It is a triple decker. Simple building. We own it. We rent it out. We provide a great resident experience. It produces distributions, dividends. It either appreciates or sometimes assets go down in value as well. But we record all that on chain as we get new appraisals. And that is our real estate focus. Seems incredibly narrow. But again, I want to highlight that just in that small cap multifamily asset, just in the US, there's about 2 million of these buildings. That's worth about $2.5 trillion, which is about a currency level ecosystem, right? The Swiss franc is maybe $600 billion in value. Bitcoin, plus or minus hovers in that range, a bit bigger these days. But that is an asset class that could be big enough to begin to have currency-like characteristics that we think is, in a very exciting position to be optimized through a platform like Groma's.
So on the token side that you touched on, is that your vision to have a Groma coin acting as a currency, or are you trying to envision it as something else? And I want to dive into that to see kind of what are the features, right? You mentioned distributions, dividends. As a token holder, not saying if I were, right, playing the devil's advocate, if I was a token holder, what would be the benefits to me, the user, of owning Groma coins?
Yeah, so a great question. And, I'll start with kind of the long-term vision. The long-term vision is absolutely, we want a Groma coin to be, for all intents and purposes, a currency backed by real estate, but something that you or anyone else would be comfortable holding because it's worth holding, and also be able to use to spend, to lend, to borrow against, to do all the things you might do with a currency. But that is, let's be optimistic, 5 or 10 years away, right? There's a lot of work to do. You can't just build a currency. Currencies require network effects. They require all kinds of things. So today, the value of a Groma coin is truly in its asset. It is an easy way for large investors, small investors, our renters. It's quite exciting. Some people live in our buildings and own part of the ecosystem. They are a renter and an owner at the same time, which we think is an incredibly powerful way to democratize access to owning the city around you. Why would they hold a Groma coin? Well, it represents fractional interest in a diversified real estate portfolio that we think we do a good job of acquiring the right assets and adding value to them. Again, everyone can judge themselves because they can see all the data. It produces dividends and distributions in a passive way. Why does a currency always have to decline in value and an asset always, not always, have the potential to appreciate in value and produce distributions? There's no reason you can't merge those concepts and have a yield-bearing, steadily appreciating currency. That would be ideal. Of course, there's lots of risks involved in anything. And over time, because our real estate-backed token has this value of distributions, this value of appreciation, but is built on chain, there are other things that we can add functionality around. Bit by bit, we will add some consumer-friendly features, like when you renew in a Groma apartment. Maybe instead of getting $1,000 renewal bonus, you get 1,000 Groma coins, right? You are getting value, but now you own part of the ecosystem with us. Security deposits, huge pain in the ass for everybody involved. We would never charge someone a security deposit to live in their own apartment. If you own some Groma coins, maybe we don't need to charge you a security deposit because are you a renter or are you the owner? And the answer is yes, right. You are actually both in a cool and novel way. Over time, you could obviously imagine all of the DeFi functionality, lending, borrowing, spending, maybe eventually ways for renters to transmute their monthly rent into ownership. All of that is stuff that years 3, 4, and 5 will add. But today, the value is an asset worth holding. 10 years from now, hopefully the value is an asset worth holding and a currency worth spending. And there will be lots of gradated additions between now and then.
And on that piece, to kind of go hand in hand with the name of our show, Cryptonomics. Can you dive into what are the tokenomics of the Groma coin? I know you touched on that it's built on the Ethereum network, but what is the either current infrastructure or the expected infrastructure of where you guys are trying to go with the vision?
Yeah, so probably the best way to think about the tokenomics here is to draw the analogy to our TradFi equivalent, which is a REIT, and in fact, a Groma coin is a share in the Groma REIT, which is a real REIT, a traditionally a structured corporate REIT, and I haven't mentioned it yet in this discussion, but important to highlight that a Groma coin is a security. It is a security token. 100%. We follow all the securities regulations, and today, if you took away all the blockchain infrastructure that we're building that we think extends this functionality, you could describe the Groma REIT as a private net asset value NAV REIT. And when you give us $1, you get a share in the REIT. Now we do that on chain, and we provide a lot of flexibility and functionality. But on a traditional legal infrastructure, that is what it is. That also, I think, helps explain the tokenomics. The Groma REIT, Groma coin supply is unlimited, but we can't just print them, right? People invest with us, they purchase them, they give us dollars or euros or Bitcoin or whatever they happen to give us, and we hold that temporarily and then use that to buy plus or minus triple deckers, right? And then put them on our platform and improve their value and generate yield. They generate distributions, and those go back in the form of distributions to our token holders, much like, in fact, exactly like a traditional REIT would run. This is interesting from a tokenomics perspective in that it is rules driven, it is predictable, but it can also scale to, not infinite, the planet is only so big, but a theoretically very, very large supply. But it can only scale as there is demand for holders to invest in the protocol, invest in the REIT with us. And at a high level, I think that's how the tokenomics work today. And we don't see any change to that going forward. That's sort of the game plan to build value for our token holders and build a scalable infrastructure over the next decade or so.
You touched on the regulatory side. I want to put that on the back burner because I definitely want to address that and pick your brain. But one question I had from the token issuance perspective, right, that you can't just print unlimited number of Groma coins, you can't just dilute the current token holders. Is there a fixed amount per property of token issuers, or I should say number of tokens per property, or what does that look like I'm trying to think, as the company grows and expands and adds real estate to the portfolio, what does the additional issuance of tokens look like? Is there a set release schedule? Like from a technical point of view, what does that look like? If I were a holder trying to see the value, whether it goes up or down, try to paint that picture for me.
Yeah, so an important thing to highlight is the way our process works is we're not issuing tokens directly against properties. It's actually easier to think about it sort of in the inverse, right? Because it's all one amalgamated pool.
Yep.
I tend to think of it easiest as there is a supply of Groma coins, call it 100 million. Maybe they're at the moment worth $1 a piece. This is just example numbers. There's a supply of buildings, call it 100 buildings, each worth $1 million. And so that you've got 100 million tokens and $100 million worth of buildings, and therefore the price of the token is $1. If the buildings appreciate in the real world, the price might go up. If they depreciate, go down in value, the price might go down. That's a very simplistic model. In reality, what is actually happening is we've got the 100 million Groma coins, and then you come along and you say, I like Groma coin, I'd like 1,000 of them, please. So you give us $1,000, or maybe you give us an equivalent amount of value in Bitcoin or Ethereum. And now you've got 100 million and 1,000 Groma coins and $100 million of buildings and $1,000, right? So the value is still the same. Over time, we're going to build up enough of a capital buffer. Maybe we've now got $1 million in actual dollars in the Groma REIT's value, and we're going to go buy another building, add that to the pool. So issuance happens when there is demand for the asset based on its current value. That builds up a capital buffer, and that capital by mandate, by smart contract, by a lot of legal restrictions given our REIT structure, gets deployed into the type of real estate assets we buy. The inverse can also be true, right? Today, Groma Coin it's a security, but it's not a public security. If it were, and there were, it were trading on exchanges, there might be people who want to sell them, right? And that would lower the value, and that would create perhaps the need for us to discard assets. Dispose is the technical term, but sell, really, liquidate them for actual dollars to keep the market stable and provide liquidity. And that is essentially the security token and the asset ballast that gives the Groma ecosystem its value on chain. This is even simpler. There are ERC20 security laws compatible smart contracts that are Groma coins, and there are NFTs that are actually our buildings with title deed and ongoing performance. And so whether you look at it TradFi or in the blockchain ecosystem, you can see exactly the coins and exactly the value, the assets that give them value.
That makes perfect sense. Now I understand. Thank you for clarifying that, because I think to connect the dots to our listeners, I think that helps paint the picture, right? As a token holder, what is the underlying asset supporting that? So, right, it's the entire portfolio, it's the entire balance sheet and capital that is expected to be deployed, will be deployed to add future assets. So that makes a lot of sense.
And I think this is a core difference between Groma as a blockchain project and many other projects out there, that we are productive asset backed, right? A building is different than gold, right? Gold is a commodity. It absolutely has value, but its value is the commodity. Our assets are productive assets. And that's not meant to be like a value judgment in any way. They are productive in that they produce things. They produce rent. They produce appreciation. I guess commodities can also produce appreciation. So I'll stick with they produce rent and a value service, a place to live and consume space over time. And that is a core part of what we think gives the ecosystem value, but also makes our tokenomics somewhat novel in that we literally cannot print them, right? There's no way to just smart contract a building into existence. We actually have to sell the tokens as sort of a forward-looking value, build up the capital, and buy the productive asset. And that is how the ecosystem, over time, if there's demand, can grow.
Now, you mentioned the Groma coin being a security. Where does the company currently stand with the regulatory process, right? Whereas you said the tokens aren't currently available to traders, right, on the open exchange, on the open market.
Correct.
What is the time horizon? Is that the expected future? Where's the path forward on the token side of things? And where do you stand today?
Yeah, so today it is absolutely a security, and it is available for direct purchase by accredited investors. And we've started to broaden the pool a little bit, and on a technical basis, we're what's called a 506c private securities offering. That means we can generally solicit. I can come on your podcast and talk about it. We've partnered with groups like Republic, a crowdfunding platform, to tell the story of what Groma is doing and introduce us to accredited investors. But it also comes with significant restrictions, right? We are not permissionless. We have to KYC, know your customer, and AML, anti-money laundering, every single holder of a Groma token. We can't sell to non-accredited investors yet. But there are steps that we can take slowly, expensively, from a regulatory perspective, a very complex but well-trod path to do. And our next step is we're currently testing the waters for a Reg CF offering, regulation crowdfunding, which would enable us to offer a limited amount of Groma coins to non-accredited investors, which is exciting, would broaden the pool. Still lots of restrictions. We have to make sure that they meet certain criteria, but it does mean that we could, in a very passive way, invite our renters, to many of whom are accredited, many of whom are not accredited, to be part owners of the ecosystem with us. And we'll take that step. And then there are other kind of logical steps on the pathway to expanding access over time that we will, over the next, it's hard to give a timeline, but number of years, this will take years, take those steps and ideally make Groma coin accessible to more people in more places over time.
Yeah, and I think when you're talking about on the regulatory front, it can be very difficult to figure out what that time horizon is going to look like because a lot of it's out of your hands, right? You can only do so much. It's an expensive process. And I think looking at present day, right? Last month we had the ETF approvals.
Right,
So I
very
think,
exciting.
yeah, so I think we're starting to move in the right direction from a regulatory front. Do you see, I guess, with that shining a light on the crypto industry, do you seeing that having any impact on your efforts on where the company stands and kind of your path forward?
Absolutely. I think the launch of the Bitcoin ETFs is, and I'm going to borrow a phrase from our mutual friend Matt Walsh of Castle Island Ventures. It's the end of the beginning of the crypto story, right? This is the moment where the large banks, the large institutions, now have a product that they can step into, and if you want to take the somewhat fun and cynical view, they can make money off of it, and that really aligns incentives. And if you want to take what I think is a deeply held and genuine a positive view, they are now unblocked to engage in something that they know has real revolutionary potential. But they have big existing businesses, and they can't take risks that would endanger the mothership. So now they have a path to dip their toes in the water. I think the launch of the Bitcoin ETFs is phase one of three from a Groma perspective. First, people will focus on Bitcoin ETFs, and that will put Bitcoin in the retirement accounts of tens of millions of Americans and hundreds of millions of people across the globe. And what a fantastic way to build exposure and excitement and awareness. Then I think there will be a moment where brokers, investment advisors look a bit beyond that. And that's probably assets like Ethereum and Solana. And we'll have to get regulatory clarity there. But I think those are sort of okay, Bitcoin is digital gold. Now there are these platforms that can also add value. What are those about? And I think that is phase two, and that might take another year or two. And then I think a thing like Groma Coin sits in phase three, even further out, which is, okay, well, now we understand that there's digital gold and there's platforms on which you can build things. What are some of those things? And I think real estate on chain is the next most natural thing. It is the biggest market, the biggest asset class in the world. I mean, it's almost immeasurable, right? It is the world, but people try to put numbers to this from time to time, and it's like $400 or $500 trillion worth of real estate value, across the globe. And the ability to make that fungible and portable and liquid and tokenized is an exciting opportunity that, as the big groups and the small groups follow that path, I think we'll see more and more interest of real world assets on chain in the coming years.
Yeah, and as I mentioned at the beginning, right? I think the tokenization of real world assets is the way of the future. It's going to take time to get there, but I think that is how you get the mainstream users to understand what this technology can offer, right? I think that was for the longest time. I've been in the space personally for 9 to 10 years, trying to decipher to people that are not in the crypto industry what can digital assets, what can blockchain technology do, right? It's always trying to parlay examples into real world assets, and I think we're starting to see the fruit of our labors. I think that's the you mentioned the long term vision. I think that's like our vision to get the short term, right? It's going to take time, but I think that's where we're trending to go. One question I like to ask everyone right before the end, before we finish up. I don't do price predictions. I don't do any of that. But I'm curious, in 2024, right? We're sitting here in February. What are you most excited for this year, right? Is there any particular crypto projects? Is there any particular areas in this space that are being built out? I know we have the ETF approval, which is a big one, and you just mentioned kind of the L2s now, and moving towards what that third level be, where Gruma sits in comfortably. Is there anything in the, I guess, the short term 2024 that you're particularly excited for or interested in, totally on a personal level? But I always like to pick everyone's brain on, I guess, what's on the horizon for this year and what do we have to look forward to?
Yeah, well, I'll share one project that I'm particularly excited about, just on a personal level, which is an effort called Agro Token, and pulling the conversation all the way back to the beginning, the sort of fact that the ancient Sumerian shekel was sort of a grain-based currency, and that is one of the assets on which you could base a currency. Agro Token is bringing grain and agricultural futures and commodities on chain, and it's an incredibly interesting, incredibly exciting project. I think they're doing a great job. They've been scaling and raising some serious capital to build it out. And so, for academic and personal reasons, that's one I'm really excited to see grow and flourish. And more broadly within the ecosystem, I'm, like a lot of people, looking forward to continued regulatory clarity. I think the Bitcoin ETF was just the beginning. There are good rules and there are bad rules, but a lack of clear rules is the worst case. And I think we're slowly but surely moving towards a world where we get regulatory clarity, and that will enable many great projects, Groma, AgroToken, millions of others, thousands of others, to really build value in the ecosystem for people here in the States and all over the globe.
Awesome. Well, Seth, I appreciate you taking the time today. Where can listeners go to learn more about yourself as well as the company Groma?
Yeah, if you want to learn more about Groma, go to www.groma.com. And if you're interested in reading our white paper, it's not publicly available yet, not quite ready for prime time, but if you email us at whitepaper@groma.com, realistically, you'll probably get that right to me, and I will happily share you a preview copy and would love your thoughts and feedback.
Awesome. Well, with that, we wrap up another episode of Cryptonomics. Thank you.
Thank you so much, Mark.
All views expressed in this podcast by Mark Eckerly or his guests are solely their opinions and do not reflect the opinion of Witham. This podcast is for informational purposes only.